Yeah, look, I think for the Fed, what we should be getting to a point is that the inflation concerns that seem to be a bit of muscle memory for a lot of investors, those inflation pressures start to dissipate. A lot of the concerns about what could happen as a result of tariffs start to fade. And then that really opens the door for normalization. And I think it's really important to kind of to emphasize that it's normalization. It's really about bringing rates to neutral rather than below neutral because clearly the US economy doesn't really need additional stimulus. So it's just about getting to a point where I think monetary policy is sitting at that slightly
Right.
more neutral level and letting activity do
Right.
the strength it's been showing.
I went back today and I reread Neil Dutta at Renmac, who's like really looking for a lower inflation vector. And I reread Paul Pozanorzag, who are looking for a higher inflation vector and even out. Seema, in that debate of a vector of disinflation or a resilience or reflation higher, what's the distinction? For me, it's the wage, but what's the distinction for you of which way that cuts?
Well, similar to you, it's wage, but I think kind of going a little bit a slightly higher level, it's still coming back to productivity. How is productivity going to be impacting the economy? What is the result of all of the AI investment? Now, we've already seen from the last couple of quarters that productivity growth has accelerated. And if that were to continue, then we can get to that point where you have very strong macro picture, strong real wage growth, and your inflation is at least within a level that it can't be too much of a headache for the Fed. So I think that's certainly what we're anticipating. We have very limited worries about the strength of the US economy through this year. It's really about, is that inflation picture going to improve and permit the Fed from delivering those neutral rates?
Seema, we saw in 2025 and even so far year to date in 2026, in terms of the equity market performance, while the U.S. is doing very well, many markets outside of the U.S. are doing even better. How do you think about that allocation, U.S. versus maybe rest of world?
Yeah, look, I think that we clearly saw this in play last year, and a lot of that was about a valuation game. Now, coming into 2026, what we're hearing is, look, a lot of people, us included, we do believe in the tech narrative, but we don't believe that we'll see as such strong returns that we've seen in recent years. So that means that investors are saying, okay, where else can we look? Where else can we diversify? Is it the S&P 493 or is there something outside of the US? And so what we're seeing is that earnings growth expectations for the rest of the world is almost on par with what you're seeing for the S&P 493, and yet there's slightly more attractive valuations when you move outside of the US. So that becomes quite a compelling perspective, and certainly from a client side, that is where a lot of the interest is where in Europe, where in Asia, where are the other opportunities?
Seema Shah with us. We continue with Seema Shah of Principal. I can't say enough, folks, about the eclectic view of her global strategy. Was gold, I mean, the surge in the last 24 hours in
Wow.
gold, Seema, let's just start with a why. From where you sit, why is gold to the moon?
Look, I think there's some secular reasons why gold is doing well. I think the stratospheric move that we've seen in the last couple of months, in the last few days, I think that is just momentum. I'm not entirely sure if there's a fundamental reason for that sudden spiral and acceleration that we've seen. We do believe that precious metals generally can do well, given the focus on technology, the fact that all of these things are going to be necessary for that build out. But I think that move has gone a little bit, well, not a little bit, quite frothy.
Yeah, boy, looking at silver up 65% just year to date, just extraordinary there. So it's not just gold, it's also silver. How about the U.S. dollar, Seema? Persistent weakness, folks calling for even a lower dollar. I'm not sure what your dollar call is, but how does that factor into your outlook?
Starting this year, we were anticipating some dollar weakness, certainly not the severity that we've seen in the last couple of weeks. And now, 3 or 4 weeks into the year, what we're seeing is that policy uncertainty is, I think, more elevated than anyone had anticipated. And that's going to continue to weigh on the dollar if it were to persist. Conversations around Fed independence, the continuation of geopolitical risk, all of that is weighing on the US dollar. So from our perspective, that can continue. And it really adds to the more attractive international environment that we're seeing. So our equities team is very, very heavily into that international equity story. And the weaker US dollar is certainly part of the story.